Question 91. A lease of property owned by an emancipated minor cannot have a term longer. A. The number of years between the emancipated minor's age and 21. B. 5 years. C. 10 years. D. The lease term cannot be longer than a probate court would authorize. Correct answer is D. The lease term cannot be longer than a probate court would authorize. An emancipated minor is a person under the age of majority who is legally considered an adult. Emancipation can be granted by a court or occur automatically under specific circumstances like marriage. Emancipated minors can enter contracts, manage finances, and make their own decisions. They are independent of parental control and responsible for their own support. An emancipated minor has the legal capacity to enter into contracts as an adult, but there are still some limitations. An emancipated minor has the capacity to contract, but the length of a lease of their real property is indeed subject to probate court oversight, just as it would be for someone declared legally incompetent. The probate court's involvement ensures the minor's or legally incompetent person's interests are protected. Question 92. An agency relationship would not be created by A. Subrogation, B. An oral agreement, C. Implication, D. Ratification. Correct answer is A. Subrogation. Subrogation is the legal process where one party takes over the rights of another party, typically in insurance or financial situations. It's not a method of creating an agency relationship. Agency relationships are created through B. Oral agreement. While not always recommended due to potential proof issues, an agency relationship can be created through a verbal agreement in some situations. C. Implication. An agency relationship can be implied by the actions and conduct of the parties involved. Even if there's no express agreement, the way the parties behave might create an agency relationship in the eyes of the law. D. Ratification. This is when one party approves or accepts the actions of another party, even if there was no prior agency agreement. By ratifying someone's actions, you can create an agency relationship retroactively. Question 93. Which of the following terms is not like the others? A. Novation, B. Assignment, C. Escrow, D. Sublease. Correct answer is C. Escrow. Novation, assignment, and sublease all relate to transferring or modifying existing contractual obligations. Escrow, while related to real estate transactions, is a separate process involving a neutral third party holding funds and documents. It's not about transferring or changing the underlying contract itself, but rather about facilitating its completion. Question 94. Which type of bankruptcy filing provides a firm with the opportunity to reorganize its debt and to try to reemerge as a healthy organization? A. Chapter 7, B. Chapter 11, C. Master Reorganization Filing, D. None of the above. Correct answer is B. Chapter 11. While Chapter 7 is used by firms which are past the reorganization stage and must simply liquidate their assets to pay off creditors, companies in Chapter 11 will contact their creditors in an attempt to change the loan terms, such as the interest rate and dollar value of payments. Both Chapters 11 and 7 require that a trustee be appointed. However, in Chapter 11, the trustee supervises the assets of the debtor and allows business to continue. Question 95. Which is the least important factor in the appraisal of a 30-year-old residence? A. Reason for the appraisal, B. Building's physical condition, C. Original cost of the property, D. None of the above. Correct answer is C. Original cost of the property. While the original cost might be somewhat interesting, it's the least important factor in appraising a 30-year-old residence. Property values change over time due to market conditions, depreciation, renovations, and other factors. The original cost is a sunk cost and doesn't accurately reflect the current market value. Appraisers focus on current market data, the property's condition, and other relevant factors to determine its present value. The reason for the appraisal can influence the type of value sought, market, insurance, etc., but not the process of determining that value. The building's physical condition is critical. Question 96. An increase in the value of an investment or a real estate property, giving it a higher worth than the purchase price, is called A. Realizable gain, B. Capital gain, C. Appreciation gain, D. Tax incurring gain. Correct answer is B. Capital gain. Capital gain refers to the profit made from selling a capital asset, even if it's just on paper, unrealized capital gain. It's the difference between the original purchase price and the current market value. Let's break down why capital gain is the most accurate answer in this scenario, and why the other options are less suitable. The question's focus. The question asks about the increase in value which gives the property a higher worth than the purchase price. It's crucial to distinguish between appreciation, the increase itself, and capital gain, the profit. Appreciation versus capital gain. Appreciation describes the process of increasing in value. A property appreciates over time. Capital gain, on the other hand, refers to the profit realized, or potentially realizable, from the sale of a capital asset. It's the difference between the sale price, or current market value, and the original purchase price. Why capital gain is more accurate? The question says the property has a higher worth than the purchase price. This difference in worth is the capital gain, even if the property hasn't been sold yet. It's an unrealized capital gain at this point. The question isn't about the process of the increase, appreciation, but the result, the difference in value, capital gain. In short, the question is about the profit resulting from the increased value, not the process of increasing in value. That profit, whether realized or unrealized, is a capital gain. Question 97. The instrument that is generally used to secure a loan on personal property is called A. Pledge agreement, B. Security agreement, C. Trust deed, D. Financing statement. Correct answer is B. Security agreement. A security agreement is the instrument used to secure a loan on personal property, chattel. It creates a security interest in the personal property, giving the lender the right to repossess and sell the property if the borrower defaults on the loan. While a financing statement, UCC-1, is related and often used in conjunction with a security agreement, it's not the instrument itself that creates the security interest. The financing statement is what's filed to give public notice of the security interest created by the security agreement. Question 98. Among the following choices, the beneficiary of a trust deed would most probably be the A. Borrower, B. Savings and loan, C. Trustee, D. Seller. Correct answer is B. Savings and loan. In a trust deed arrangement, used in some states instead of a mortgage, the lender is the beneficiary. The borrower, truster, grants the trustee the right to sell the property if the borrower defaults on the loan. The savings and loan, or other lender, is the one who benefits from this arrangement, as they are the ones who will receive the money from the sale if the borrower defaults. Question 99. Which of the following is included in the bundle of rights? A. Right of possession, B. Right of enjoyment, C. Right of encumbrance, D. All of the above. Correct answer is D. All of the above. The bundle of rights associated with real property ownership includes a range of rights, including right of possession, the right to occupy and use the property. Right of enjoyment, the right to use the property as one wishes, within legal limits. Right of control, the right to determine how the property is used, within legal limits. Right of exclusion, the right to prevent others from using the property. Right of disposition or encumbrance, the right to sell, lease, mortgage, or otherwise transfer ownership of the property. This is a key right, as it allows owners to leverage their property for financing. Question 100. The following are factors in determining whether an item is a fixture except A. Method of attachment, B. Purpose item is used for, C. Intention of the parties, D. Relationship of the parties. Correct answer is B. Purpose item is used for. The MARIA acronym, Method of Attachment, Adaptability, Relationship of the Parties, Intention, Agreement, helps determine if something is a fixture. Intention is the most important factor, often inferred from the other elements. The relationship of the parties is considered to provide context for their intent. The purpose an item is used for is related to adaptability and intention, but isn't a direct test itself. A written agreement between parties about an item's status is usually